Hi, everyone. Good afternoon or good morning, depending on where you are in the world. I'm Francine Lacqua from Bloomberg TV, and I'm delighted to be joined by Commissioner McGuinness. Now, this is part of the EU policy series at the Bloomberg Sustainable Business Summit Global, and so we have about 20 minutes to discuss various events. Mairead McGuinness, European Commissioner for Financial Services, Financial Stability and the Capital Markets Union, is joining us to discuss ways to step up private-public collaboration to achieve some of these goals. Commissioner, first of all, a very, very big thank you for joining us, because I know it's one of your busiest days, certainly of the summer. The EU, a short while ago, adopted the sweeping overhaul of rules to cut emissions by 2030. What does it mean for financial services?
Well, actually, what we did today is in tandem with what I'm doing with financial services. So this Fit for 55 package is about updating legislation because we have higher ambition for 2030, 9 years away. So very soon. And what we're doing on the financial side is making sure that the financial system goes or looks green, but also finances green. So we've had a number of measures, including disclosures, a European taxonomy of what is sustainable economic activities. And last week we had this transition strategy because we want to be more inclusive, global. And also a key point for me is that the financial system itself is subject to real instability because of climate change. So we're looking at how do we factor all of these risks into the financial system. Now, today's discussion, I've just come from a really busy college meeting, was on this package, as you've referenced. And look, what we all need to understand, wherever you are, that if you believe that climate change is real and you know that time is short, you can't say, yes, I want to change, but just not now. Don't ask me, ask a friend. All of us have to change. So it's not an easy message, but my message to the financial system since I took over this role here is quite a severe one, because the financial system has the capacity to give us the resources to do all of this change. Firstly, by investing in what is green today, but also investing in the transition and maybe looking at some of those investments that are not sustainable and perhaps turning away from them, because we need, if you like, those three pathways. And for me, then, it's how do I identify for the financial system what is economically sustainable? What am I asking of corporates, large and small, to do? And what I say in a simple way is look at our taxonomy, which does identify what is sustainable, as a management tool. So if you're not sustainable today, but you want to be in business in 20 years' time, you've got to work on the sustainability agenda, whether you're large or small. So in a way, there's a lot of pieces of our, if you like, jigsaw coming together on the financial side and on the legislative side, but it's a lot to take in. And I really, when we're talking to citizens and business, it's to try and reassure people that we're not doing this without being sensitive to the consequences, socially, politically, etc. But in one sense, to state very clearly, we don't have a choice. We have made legal commitments to reduce emissions and to be climate neutral by 2050. I hope to be around for 2030 to achieve those targets. I'm not sure about 2050, but I will have family who will be around, and I want to make sure that the world is fit for purpose by that time.
So, Commissioner, how can more private capital flows actually be stimulated, and in which areas?
Okay, there's several ways that we need to do this, but I think it's really important to say to private capital that's looking for a home, that there's also responsibility on investors to look in a sustainable way, to look to the long term, and maybe to turn away from what they know they're investing in today, which could be damaging the climate and the environment, because we're really concerned about environmental degradation. We know that public finances will do something, but not enough. So we absolutely need to get a lot of private finance. And one figure, which I think is quite, stark, 350 billion additional investment every year will be required in Europe to meet our 2030 target. So how do we mobilize investors? How do we get that capital looking towards what's sustainable? We give them information, because at the moment there are many standards. Companies use a whole range of pick and choose, if you like. What we are doing with our Corporate Sustainability Reporting Directive is pointing out very clearly that corporates will need to report these measures, but equally we extend the range, the scope of the reporting requirement to all listed companies in Europe. We also want SMEs, if they want voluntarily to get involved in this, and I think they should, to come on board as well. So I think once investors have clarity of information, that what they're investing is sustainable. But equally, we need to make sure to give assurances. So there needs to be a way of verifying the information that's provided. And it also has to be available, obviously, in digital format. So the work we're doing, if you like, behind the scenes on this whole machinery of transparency is to really make sure that in a very short period of time, financial information, which is fairly well understood now, it took a while to get all the accounting rules, but it and non-financial information are equal. So in future, we won't just look at a bottom line on figures. We'll actually say, okay, so is this company damaging the environment, or is this company aware of the damage to itself from climate change and environmental degradation? So I think what it does require, but it's happening anyway. I'm sure people who are watching and listening will say this is happening, maybe slowly. Management, leaders, board members are having to change the way they think and how they look at a company. And in a way, I think COVID-19 has given us a horrible example of our inability to do that in the past. I keep saying to companies, did you ever think that an investment in public health would be important for you as a private businessman or businesswoman? Because you now realize that lack of investment in public health, where we were not resilient, has resulted in your business closing and huge losses. So I actually think we can use this horrible time of COVID-19 to remind us of how vulnerable we are, how we need to take a more holistic approach to how we live, work and play. And I think citizens understand that very well today. And I'm hoping that that push from, society generally will encourage investors to look towards sustainability. Pension funds, for example, they have a long-term view. They should listen to what their pension holders will want for the future. Now, we also need to make sure that there's a return on investment. So it isn't that we're saying that companies shouldn't be profitable to be sustainable. We need it to be both. And that's why a lot of our work, we have a platform on sustainable finance working internally. We work with our international platform as well, is to try and make sure that every step we take brings us closer to achieving transparency and solutions for businesses and the financial system around sustainability. Lastly, to say that ESG, environment, governance, social, everyone likes it in their annual report, and it was nice to have. From now on, it's not just nice to have, it's absolutely vital, because we will move to social issues, and it's also important that it's verifiable.
So first of all, I'd love to remind everyone that you can send questions, and please send many questions. Do not be shy, which I'll be putting to the Commissioner. And you're of the view, Commissioner, that actually the COVID crisis really reminds us that the S in ESG is so, so, so important. First of all, what do you mean by S? And, what does that mean for the green recovery being at the forefront of the policy agenda?
Well, our priority at the moment is the climate. So a lot of our work is front-loaded to achieve our climate targets. But because we have ESG, we've also asked our platform on sustainable finance to look at the potential for a social taxonomy. So I can't give you details about what that might contain, but what it shows is that we are looking beyond finance, we're beyond climate, we're looking at social. And I suppose in a way, what that will probably mean, again, is a forensic look at supply chains, a forensic look internally at how a business deals with employees and diversity and inclusion, and all of those things which are now really, really important. They matter, and they matter at board level. So this is a work in progress. We will know more by the end of this year. And equally around how companies look to the future. I know I get a lot of angst from SMEs, small and medium-sized enterprises, and I fully understand that, because they're coping with COVID and trying to get back on their feet. But what I try and persuade entrepreneurs, large and small, to view this transition, as we call it, I think it's more dramatic than a transition, truthfully, but to view this as their future. So if you don't get on board this discussion around sustainability and look at how vulnerable you are around climate and other risks, you won't survive. So in a way, what we're giving business and the financial system, we're giving them the tools for survival. And we all know that at the moment, there's a lot of money there looking for a home. In Europe, we want to encourage retail investors. We have a lot of money on deposit in banks. We really wish that people would look to invest in businesses and get a return where they're not getting it in the banking system. So we have a lot of work to do around the mechanics of literally getting investments flowing. But those at the moment who are sitting on big funds and are looking towards long-term investments, I see it already. I hear the narrative. And as I say, what they want is, I mean, we're past the nice talk. We're past all of that warm, fuzzy feelings. This requires action now. I made a comment recently, I think on Bloomberg actually, that, you know, money makes the world go round. It's the words of a wonderful song, which I will not break into immediately, but it has the capacity to, you know, spin the world out of control. And that's what's happening around climate. If we put this money to good use, the impacts are immediate, and, you know, they're visible, and they're fantastic. And we talk here, we've had a lot of discussion about the costs of all of this change, and people look at the costs and the implications. And I try and balance everything by saying, look, you need to balance that with the costs of inaction. So if we do nothing, the costs are just off the Richter scale, and we will not be doing what's right for the next generation. So we need to really talk maybe about value rather than price, because that is quite different. And I think, again, the financial system, which normally doesn't, it's quite cold in its analysis, is beginning to understand that that's important, but equally important is to have this broader look of the role of the financial system in society. And we went through a banking crisis not too long ago globally, and it tarnished the view of citizens of the financial system. So I think there's an opportunity for our financial system to restore its reputation and to be part, which it is, an essential part of this transformation of our economy and society.
And Commissioner, thank you so much for all of the questions coming. Commissioner, you mentioned these sustainability standards. I mean, they must play a big role in actually trying to scale up some of these sustainable investments in the EU. Do you think we'll ever get to a place where, you know, the same standards will be applied globally, especially in the US?
Well, look, I think this is a hugely important issue for me, because if Europe goes alone and does what it's doing, that's not enough. That won't save the planet. We need global cooperation. So we've been running at this for some time. We set up the International Platform on Sustainable Finance. We would like to see a common ground taxonomy developed at the global level. So what it would mean is not that this is the highest ambition, but this would be, if you like, the starting point. And then different countries, different continents would work from that. So Europe is moving faster and further, but we want to be, if you like, in the global conversation, because it has to have a global response. Climate change is everywhere and impacting everywhere. And we've had good discussions with our US counterparts, and really interesting to see what way it will be tackled in the US and what Europe's doing. We can learn from each other. Equally, China is in this conversation as well. So across continents, there is now a very clear desire that we work together in tackling climate change. And this will culminate to some extent in the next COP, which is coming up at the end of this year, where climate finance, sustainable finance, is one of the top agenda topics. Because, you know, I keep making the point that, you know, woolly ambitions and warm words, really important, they motivate. But money matters. It matters hugely. And it matters where it's invested. We want to stop it being invested in things that are not sustainable and are actually harmful. And we really needed to move to finance the transition and what's green today. So transformation of our energy system, our construction sector, everything has to change. And I suppose one of the things I'm conscious of, because I have a political background, I'm an elected member of the European Parliament before coming here, I'm conscious of the need to talk to people about the implications and listen to their concerns and address them and make them part of this solution, rather than saying, we're doing this because we know it's right. We're doing this because we want you to be on this journey with us, not just for yourselves, but for that next generation.
Commissioner, I'm getting some great questions from audience members. So this person writes in saying, you mentioned $300 billion in capital required to meet the sustainability goals for 2030. How do you see digital technologies help you achieve and accelerate the goals?
Well, it's 350 billion euros, actually. So I won't do the changes there, but it's a lot.
About 300.
It's a lot. But I mean, the reason I make the figure visible is I think it focuses our minds on what's required. I mean, the question is around digital, but maybe I'm not getting the full sense of this. I mean, to my mind, this is about mobilizing capital. In whatever form it comes and wherever the sources are, as long as they come from reputable sources, because we know that money laundering is another issue that I'll be tackling shortly. So we need, I suppose, the financial system to understand that Europe is serious about the green agenda, about the transformation of our economy. We have this next generation EU, very big fund going out now to member states, 750 billion. We're raising bonds as we speak, and they are really oversubscribed because, again, I think long term, people realize this is the future and that Europe is leading in the future. So, I mean, my broad answer to that question is yes, this is a big sum of money. Secondly, we want it to come both internally in Europe but globally. We want to draw investments into the European Union. But equally, as you mentioned, the global context, we want to make sure that the developing world, our near neighbourhood, that they're also part of this conversation. Because in a sense, we here in this world, the privileged, if you like, who've managed economies and whatever, and have democracies, we have benefited from using fossil fuels. So in a way, we have to give a little bit back here and understand our duty to help others perhaps not make the same mistakes as we've made, and to leap forward with renewables and other technologies. And lastly, to say we also want money to be invested in innovation, because I think we all know innovation will be needed. And, not that we're hoping it will happen, we have to invest to make it happen. We have some difficult issues to deal with around the view around gas. Does it have a role in a transition? Many of our member states believe it does. They can't go from dirty coal towards renewables overnight. Then there is also the issue of nuclear, which will be part of the overall energy mix in the long term. Some member states absolutely committed to nuclear investments, and clearly it's low carbon. And then we have questions around another criteria we talk about: do no significant harm. So in a sense, all of the work we're doing here is certainly not simple. And I'm sure in 20 minutes we won't get to the entire core of it. But what I'd like to get across to you and your viewers is how serious Europe is about this. And I think COVID has propelled a sense of urgency as well, notwithstanding the many fears that will be there and concerns amongst some sectors. For example, if we decide to ban the production of combustion engines by a certain date, which will be revealed very shortly. But what we're doing is giving signals and signposts. And what's really interesting is if you take the automobile industry, they were a bit hesitant about all of this change. Now what their ask of us is not so much don't make us change. They're saying make sure you have the power points along motorways so people can actually recharge. So they're getting to the practical stage now. They know this change is evolving.
Where do you worry about greenwashing the most within the financial sector?
I mean, I think, first of all, I think greenwashing is a big, it's thrown over everything in a way. I mean, we've identified what is economically sustainable, and that's a difficult task. It is science-based, but it also has to be acceptable to users. So we have this taxonomy, which covers about, I think it's 80% of our economic activities. I mean, I think greenwashing will be found out very quickly. It's also fair to say, and really important to say, that we're going for this, if you like, gold standard European green bond. We've approved just the process by way of a regulation. So the co-legislators, parliamentarians, etc., have to get stuck into the details of this. And the reason we're going for this gold standard is there's lots of standards at the moment, ICMA and many others, and they're really good. So we're working off the best today so that we're best for the future. So I think anyone who's looking for certainty needs to work with the standard that is recognizable and that is today regarded as being clean, that it's not involved in greenwashing, where we will have to be really careful. And it does involve extra work in terms of assurances or auditors, is to make sure we just don't check at the beginning, but we have milestones and targets. So if it's a long-term one, you look at, is this really going in that direction? So that there is also then a fear factor. So our supervisors will be watching where the spend is going, and people can be penalised. So what we're doing is a little bit of the carrot, we want to encourage, but equally to say, look, if you claim to be sustainable and you're found out not to be, you could be in trouble. So I think you need that balance of both. Maybe also to say around greenwashing, we work a lot with the NGO community, and there's really important environmental activists, and they really want to reach the stars, and I admire them for wanting to get there now and immediately. I suppose with my practical hat on and a political hat on, sometimes I have to settle for some steps today and more tomorrow towards that best in class.
So what you were just saying, how does it affect, and this is another great question from an audience member, how will this affect actually trade agreements such as CETA?
Yeah, I mean, I think around trade, we've had a long discussion internally here. So one of the fears sometimes of industry and indeed our agriculture sector is, look, we have very high standards around climate, etc., and yet we might import and displace our own production. So we talk about a carbon border adjustment mechanism to take account of that. And again, the details will be rolled out probably as I'm speaking to you. It won't happen immediately. Because we need to make sure that it is WTO compliant and that it is in the wider scale that with our global partners, they understand where we're coming from on this. So that is a work in progress as opposed to immediately happening. But I think for all of us, I mean, I regard this as quite a simple but complex insofar as, let me remind you of Brexit. When Brexit happened, many businesses in Europe and the member state I know best really had to look at their supply chains to see how vulnerable they were to this new era where the United Kingdom was no longer a member of the European Union. And they changed. They changed their supply chains. They were ready and they were proactive. What I say to business and the financial system today is you need to do the same, because the change that we're going to have to face and that you need to finance is coming. And you better be aware of it before it hits you, because the costs involved afterwards are much greater. And if you look at our insurance sector, look at the difficulties around insurance for pandemics, all of these things, it hits every single sector in the financial world. So a lot of the work I'll be doing throughout the rest of this year is looking at our legislation around the insurance sector, around Solvency II, as we call it, to see, is it really helping our insurance sector to play its part in long-term investments towards sustainability? So you could say that we are, if you like, ratcheting all of the bolts in our system here and checking that they really are, fixed on this future, which is around carbon neutrality and addressing climate change, which brings other benefits. So my health commissioner colleague, Stella Kyriakides, spoke about the health benefits if we tackle climate change. People who are energy poor sometimes use dirty coal. It's all they can afford on a weekly basis. We need to make sure that we support them in a transition, and that will be better for their health as well. So, I mean, there's a lot of good in this, but I think there's a lot of fear around the implications and the change.
And Commissioner, I'm getting quite a lot of questions actually from bank representatives saying, what ESG scoring framework fits best with the incoming SFDR and EU taxonomy?
Oh, look, how long have you got here? I mean, I think what we're saying to financial
45 seconds.
Okay, we have actually got a financial disclosures. So if the financial system knows, what we're trying to say is, look, we're going to be looking at what your portfolio is, and you're going to be looking at that, and you're going to say, gosh, we're not very climate friendly here. We're going to have to change. So what we're doing is nudging change in the financial system, nudging change in the corporate world to avoid this mandatory, requirements. And I think that if we all, live up to our own responsibilities, this change will happen and happen in a very good way. But I do think that question, as I say, is too big for 45 seconds. But if you look at our corporate sustainability reporting directive just out, if you look at the financial disclosures which are required, we've done, if you like, a ton of work in the last year. And we now are bedding it down. So I would ask people to look at our strategy just released last week. I think that will give you more detail, because we need more discussion around the transition and finance for that transition. And we need also to make sure it's inclusive. So citizens, SMEs, not just the big, but everybody gets on board with this. And so far, the response to what we're doing, while people are taking a sharp intake of breath, they're saying, actually, we know this is coming. And at least you're giving us very, very strong signposts. For me, the biggest signal is how we will actually price risk, or how banks will price the risk that they face from climate, what that will mean for capital requirements. We're going to get reports from our banking regulators here in Europe looking at these questions. And I think when that becomes part of the conversation, you're going to see a much more rapid move towards making sure that portfolios are aligned with the future, not stuck in the past.
Commissioner, maybe one final very quick question, and this is an audience member saying, should sovereign debt and EU debt also respect the EU green bond standard?
I could catch that with the corner of my eye. And what I wanted to say to that question, we're issuing bonds at the moment, which are meeting the best requirements today in the green and bond market, because we want 37% to go towards green. The gold standard I speak of, the EU green bond, it will take some time for it to go through the legislative process. But when it does, it will be the one we will use. Our member states want this as well because they want to be able to use a standard. So in a way, yes, is the answer. There will be this standard when it's fully through the process. It will give clarity, precision and direction. And we hope that it's not just for Europe. We want this to be used everywhere. And we're very happy to talk to all our colleagues globally around our experience, because in a sense, we're out there first. We're trying to do all of the right things to achieve our targets. Our citizens are very engaged in this debate. And I think, to use that other expression, the rubber is now meeting the road. We're moving from words to real action. And the action is money. Money talks. We need it. We need private investment. And I would say to those who kind of, think this isn't for them, it absolutely is. And it is from a point of view of being sustainable. But I think all of us have a conscience. I think all of us understand that it's a duty, a moral responsibility not to invest in things that are bad for the planet. And sometimes that's too big a thought, but bad for your family, bad for your community, bad for your country. I mean, I think we all know what the right thing to do is. We don't want to go towards brown taxonomies, but they're always hanging there. I rather do it with persuasion through green and showing people the right way.